Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, May 18th, 2022. The markets did reverse. After opening at yesterday's Globex session at the session highs, the S&P tried to hold on, but eventually broke cleanly back below 4,000. And actually, I think it may have taken a slight test. Nope, got close. But it's about ready. It's getting ready to break below 3,900. And that would be on its way to setting new lows below 38.55. So starting again here on the daily chart, I have only one change, and that is I've put the minute 2 in place at the Globex high from today, I guess. The high was at 495, and I'm not sure when. I'll check in a moment. In any case, the high was reached, the market did sink, and we're getting some stronger tones, basically because below 39.15, as you can see, when even on the day that we dipped and came back, we came back to 39.10, and we have gone down and taken a peek. We've gone below it. So I think this is just the tail, obviously, but just the fluff, and that we're already confident, or I'm confident enough that this indeed is minute wave 2. And from that, we should get this break, and the market then continues to drop lower. And I'll go over support levels in a moment. Before I can say that, though, I have to leave open the possibility that the market can swing once again and end up back here. And that would be nothing more than this A, this is the B, and we're doing a C. Now, this, if I drop down to an hourly chart, is not going to resemble a B wave that I know. So we still have this body and a lot of additional fluff that we need to get through before this can be labeled as done. So yes, this is very impulsive in nature to me. It is not a B wave type of a deal. In other words, that there's an ABC within this. So I do think that the minute wave 2 is fairly complete, and that we're dropping now in the minute wave 3. To put into context, let me slip right back out to this daily chart for a moment. We have we're inside an intermediate third wave. Within that intermediate third wave, there will be 5 waves of minor degree, of which we have completed 1 and 2. Excuse me. And we're now inside the minor third of the intermediate third. And now within the minor third, there will be 5 waves of minute degree, of which we now have 1 and 2 in place. We're falling in minute 3 of minor 3 of intermediate 3. So, and we can go one more, not into 3, but we're in wave A, primary wave A. So in other words, we are in minute wave 3 of minor 3 of intermediate 3 of primary wave A. That's the whole count. And that suggests that we're going to continue to slide lower. As I left it yesterday, I was discussing that if the market turns lower, it should not have a problem just like dropping, breaking through these moving averages and just going. And that's exactly what happened. So if that's exactly what I'm looking for in terms of kicking off the down wave, I'm going to give it a higher probability than the market turning on its heels and going up. I leave that open because the algorithms and just people have produced these weird moves in the past. So if I didn't leave it open, we all came in and ganged up on the short side and got our butts kicked, that would be the last time I get to talk. So without leaving that possibility open, it would be a detriment to how we feel or what we're looking for. Being aware that the possibility exists sets us up to really succeed either way tomorrow. Because again, I don't want to be bullish. I don't want to be bearish. I want to trade the price action. The price action right now continues to point down. But we have the probability, or we have a potential of it swinging and rising back up. Now, a smaller bounce, yes. Yes. A small take your breath bounce. But if it's really going to follow through, it has to really start breaking higher, because the way down, I'll go back to that hourly chart. The way down was pretty steady. Right? Here's where we started. 3 a.m. for me. But from our opening, we were already down for 4 hours. This is the fourth down hour, 5, 6. We went down 6 hours before we saw a little blurb higher. And then we went down more. So bounces notwithstanding, the pressure is to the downside. I don't suspect that that's going to give up real easy, because they had good reason for it to come in and sell. They're drawing the line in the sand. We did not get good news from the repricing process within the retail sector. Retail sales, Costco, Walmart, both hit the skids today. And it's not that Costco or Walmart are bad companies, but they need to reprice all their inflation and how that's affecting their bottom line. And then they had to come out and tell us what the deal was. And the market's like, oh my God. It's like, well, no, oh, excuse me, I almost cursed there. But no kidding, market. What were you expecting? That somehow they're not going to be affected? And the supply and demand and what they have to pay and what they can sell it for and what their profit margin suddenly becomes, this all needs to be factored in. It's called repricing. And it's coming down the chain. And now we've got to deal with it. So when these companies become extremely overvalued, as they did, I think what people forget to do is the math on how much money does this company have to make to sustain this level of price, this price in the market. And there are models that can equate how do you think these analysts come up with? Well, I'm going to reduce the price. I'm going to raise the price, my target on this, because if they make X amount of money, then they should get here. These models, I don't know. Sometimes they're okay, sometimes they're not. And they have to be readjusted. So we're in a repricing readjustment period. It's going to take a lot longer than 6 months to get through all of this, because it didn't take us less than 6 months to get here. This was years in the making, years. Basically, the last 2. We decided that the hell with COVID and killing 1 million people. No, who cares? What can we do? Oh, we're going to pump more money into the system. We're going to let conglomerate companies like Apple, Amazon, Facebook, Google get their hands on tons of cheap money and pump out stuff to you guys. And all of a sudden it's like, yeah, they're making money. Buy their stock. Well, they have to continue to make money. But as we saw from Amazon, the retail, they're getting hit. If Amazon could lose, $6.8 billion, it's filtering down, folks. Why is it such a surprise that suddenly we're going to knock the value out of Costco? Why would we believe that Costco would not be affected the same way that Amazon was? Retail is retail. How they price it is, it's all and inflation is inflation. It affects all areas. So again, that's what filtered through today. So we get to that point of recognition yet again. And so I just want to talk about that real quick. Point of recognition, here we are. This is where traders, companies, everybody, they recognize that inflation is having an effect on this company and their earnings potential and the market and my position and whatever else it's affecting. To believe that inflation isn't going to affect it that's unreal to me. Because remember, I'm going to say it again, top of the food chain, top of the pecking order are interest rates. What happens there filters all the way down. And trust me, we are the retail. We are not even retail sales. We're part of retail sales, but we're not retail as Costco. We're even lower. So it's filtering down to us because of what we have to pay. But our stock doesn't go up or down because A, we don't have any. But in any case, I am continuing to look for the pressure to come from the sellers. And so small, breathtaking bounces, and I don't mean breathtaking in terms of how high it's going to go, just the market needs to take a breath. If you're a contrarian, or even if you're a market maker and you're in some of these stocks or in some of these futures markets, and as they're selling it, you step in and you take one, you step in and you take one. As a day trader, you're kind of like, whoa, take a breath. And it's like, it doesn't take a breath. So you end up having to take a hit. So, and it's not like you were not expecting them to continue to sell. You just said you'd get a breath, you'd get a bounce. There weren't any. Just that one, as I pointed out right there. So tomorrow, moving averages. Look at how patient and dominant that 200 is. Didn't really have to move, just kind of went flat and everybody else puked. And the 50, instead of breaking above it, crested, arced, and dropped. The 20 came down and broke it. The 8 broke it. The 4 broke it. Everybody else. And now we're back in alignment. 250, 20, 8, 4. Hourly, in alignment to go down. I don't need to go lower because if the hourly is, so are the others. Daily. Look at that. The 250, 20, 8, 4. Weekly. I'm going to tell you where we sit. We're looking for, this is getting ready to cross the weekly. The 20 is getting ready to recross below the 50. The 8 and the 4 are already below the 50. Once the 20 gets below the 50, it is on a weekly basis producing another check in the negative column, another check. And I shouldn't use that word. Another check in the downside column. The market continues to point to lower. The technical, these moving averages are pointing lower. The 50 is beginning to get a little more crescent-like in fall, like it's falling. And the 8 and the 4 are already there. So what we have next up, again, on the weekly chart in the S&P, the 200 moving average sits at 36.97. So basically, you could almost say 3,700. We're not that far away. And if I think that we can get minute 3 down to 3,700, put in a minute 4, put in a minute 5, which brings us down to maybe 36 something. So my 3,750 to 3,715 to 3,700 remains valid and in play. But we're getting the sense that it's going to go deeper. So we're likely going to be heading more towards the 3,400 level before we can finish our own, the 3 of the 3 of the 3. And then we still get a 4 on an intermediate degree and a 5 on an intermediate degree before we get a more sustained, stronger rally back up. And that would come in the form of a primary wave B. So we got more downside to deal with. This unfolding, this repricing. It's still just a part of this natural process, and it's going to happen whether we want it to or not. Trading it doesn't have to be as tricky. Waiting for the market to go up. Why? Why not participate with the market going down? Why not change your mindset to include that shorting something or selling something first and buying it later, or working a position that favors a downward slope in prices is not a bad thing. It's a positive thing. And it can make you a great deal of money. And if that's your objective, is to be in the market to earn money, there are a lot more ways to do it than buying and holding. So if you're looking to become a professional trader, great. Welcome aboard. It's not as hard as you think. You just have to play along. All right. So just to briefly recap, for tomorrow, I would suspect that we continue to go down. We need to get below 3,855. Once that occurs, and unfortunately, I got to go back out to the daily so I can get our next level up here. I'm going to put on for minor wave 3, but actually I'm going to put it up for minute wave 3. So I'm going to take that from here to here, because that's the one we're in right now. I'm going to trust, I'll flatten that up, but we shouldn't be too far off. Unfortunately, look at that. If I'm really looking for minute 3 to be 1.618 times the length of minute 1, which is the most common in the Fibonacci world, that's 3365. Absolute minimum is 3643, and we've already discussed that level. So, yeah, these are real. These are real. These are real numbers. And now I'm looking for this one to come and break here. So it's going to take a little bit of time, but hey, we were down 150 something today at one point, maybe more. So a couple more days of that. And I do think that we're now also in that part of the whole count, the 3 of the 3 of the 3. Point of recognition to point of recognition to point of recognition. This is the one that really hits home. And we saw it today. We saw them just come in and sell. It was consistent and it pushed. These are big moves. That's a lot of money being flipped around, going from one place to the next, to the next, to the next. Your job, should you decide, or your mission, should you decide to accept, get in there and get your piece. You settle in cash every day. Don't carry position, settle into cash. Good or bad, you settle into cash. You know what you got, you know you can live. All right, I'm leaving it right there. Our next update will be on Thursday, May the 19th.